So guys, in this video, I'm going to be answering some of the really great questions that I've been getting from all of you lately, starting with this question here from Bobby, who asks, do you only invest in dividend stocks in your portfolio? Now that is a great question, and the answer is yes. Every single one of the stocks in my portfolio pays a dividend, and there are a few reasons why I only invest in dividend-paying stocks. One of the main reasons is that the dividend payments are not impacted by the random whims of the stock market. In other words, no matter what the share price is doing, whether it's going up or it's going down, you're still going to receive your dividend payment. Now, as we all know, share prices can fluctuate pretty dramatically, and it's not uncommon for them to go up or down as a result of things that really don't have anything to do with the company's actual financial performance. You know, certain news can come out and a company's share price can either plummet or soar just based on whatever that news is, but dividends, however, are always rooted in the company's actual operations and its ability to generate profits and free cash flow. You know, if a company isn't growing and if it's not profitable and generating free cash flow, then it will not be able to sustainably pay and grow its dividend. So in a way, it kind of forces you to only invest in fundamentally strong companies. And really, at the end of the day, those are the only types of companies you should want to invest in anyway. On top of that, dividend investing is incredibly straightforward. And at least in my opinion, it's a very low stress, low maintenance way to invest. Okay, you buy the stocks, collect the income, reinvest that income, and repeat. That's literally all it takes. And since it's naturally a buy and hold strategy, you don't have to worry as much about trying to time the market. And this is very important, you don't have to sell your shares down the road to be able to benefit from the investment, which is something you just cannot say for the non-dividend payers. And honestly, that's something I've never fully understood about the non-dividend paying stocks. Why would I want to own something where the only way to get any sort of benefit out of it is by selling it? With that said though, to be fair, that does tend to work fine for a lot of people. There are plenty of investors out there who buy non-dividend paying stocks, and when they're ready to retire and use their investments to pay their bills, will slowly start selling off shares to fund their retirement lifestyle. And with that said, there's, obviously more than one way to do things, but that's just not how I want to do things. With dividend paying stocks, I can have this cash-based relationship with my investments where they just give me a paycheck for being a shareholder. And depending on the business, that paycheck could keep coming even after I'm no longer here. And now we're talking multi-generational wealth, which is awesome. But anyway, guys, in a nutshell, dividend investing, at least in my opinion, is a very simple, very straightforward way to invest and create passive income. This type of strategy allows you to focus on building long-term wealth without having to worry as much about trying to time the market or without having to sell your shares someday down the road. Like I said earlier, all you need to do is just buy the stocks, collect that income, reinvest that income, and repeat. But anyway, this brings us to the second question of the day, which comes from Paolo. Paolo says, I wanted to ask you about Altria. You seem to be pretty fond of it despite it being a declining business. Should we be worried? And this is another really great question. Altria is a company that I think about quite a bit, and it's definitely one that I'm keeping a close eye on. While I still believe the dividend is secure for now, I'm not worried about Altria cutting their dividend. I am concerned about the company's revenue trends. I mean, their sales have stagnated. They're still going up ever so slightly, but it's pretty flat. But their sales have stagnated due to declining cigarette volumes, and cigarette sales make up a majority of the company's revenue. And having said that, some of this does seem like a natural part of the business life cycle. I mean, Altria is a very mature company, and they've been around for a very, very long time. At one point, Altria and Philip Morris were the same company, and Philip Morris was founded back in 1847, so almost 180 years ago. With that said, though, Altria is actively working toward getting back to more growth through what they refer to as a smoke-free future. They're trying to shift away from traditional cigarettes and move into areas with more potential growth like e-cigarettes, heated tobacco products, and nicotine pouches like On. And while I do think they're headed in the right direction, this transition certainly won't happen overnight, and it's likely going to take quite a bit of time before the revenue from their smoke-free products catches up to what they're making from cigarette sales. In the meantime, I'm comfortable just holding on to my shares and collecting that dividend income. Despite the revenue trends, Altria has been one of my better performers over the years, and they continue to improve profitability, which is great. Overall, I'm interested to see how things play out for this company, though, and the industry as a whole. But anyway, now moving on to question number 3, which comes from John. And John asks, what are the top 3 books you would recommend for anyone who's into dividend investing? And John, my friend, you opened up a can of worms. I love to talk about books, and I'll tell you what, it's going to be hard to narrow it down to just 3. But anyway, first, I would definitely put The Ownership Dividend by Daniel Paris on this list, which was a recent read of mine. I read that on my honeymoon a few months ago, and I would highly recommend this book to any dividend investor. In fact, I think it's a must read for every dividend investor. You'll get through it pretty quickly. I think the book is maybe about 160 pages long, and it'll give you some good historical and financial context behind where dividends come from and why they're important. With that, I would also put Investing for Growth by Terry Smith on there as well. This is an anthology of his writing over the last decade, and reading it will teach you how to keep it simple and still find great investments. Terry Smith is kind of known as the British Warren Buffett, and his whole shtick, I suppose, is to buy good companies, don't overpay, and do nothing. And through his writing in this book, there are some great takeaways on how to do just that. Now, with that said, this third book is actually my most recent read. I just finished reading this book like a couple days ago. This one is Investing: The Last Liberal Art by Robert Hagstrom. And this is another very quick read. Like the Ownership Dividend, it's about 160 pages, but it's packed with tons of great info. In a nutshell, this book covers essential investing concepts drawn from a variety of subjects beyond just finance and economics. We're talking things like physics, biology, sociology, and literature, and the whole foundation of the book ties back to Charlie Munger's idea of building a lattice work of mental models. According to this book, and also according to Charlie Munger, following your curiosity and studying a wide range of subjects will help you make connections and see things that other investors might miss. But anyway, I highly recommend you check out all three of these books, and I actually have extensive notes on all of them and tons of other books, which you can access when you become a member of the Investment Club. And if you want to learn more about that, there's a link to it in the pinned comment. I'd love to have you aboard. And with that, now moving on to question number 4. This one comes from Robert, and Robert wants to know, is it better to invest a lot of money into just a few stocks, or is it better to invest less money into multiple stocks? And man, this is honestly one of the most common questions I get, and I don't personally think there's a one-size-fits-all approach when it comes to answering this question. When it comes to diversification, it really, at least in part, is a matter of preference. I know investors who own over 100 different stocks and do well, and I also know others who take a more focused approach and maybe have like 20 different holdings or less, and that's kind of the camp I'm in. You know, I personally own 18 individual companies and 2 ETFs, which is fewer holdings than I used to have for sure, and I still, even with this, I still feel like there's room to consolidate some of these individual positions. At the end of the day, though, there really is no magic number for how many companies you own. Once again, it comes down to preference, and it also comes down to like how many companies can you actively keep track of and stay in the loop on, because that's important as well. You want to make sure you know what's going on with all your holdings, and you only have so much time. And obviously, just based on that, this number will vary from person to person, and I think you'll naturally come to find your diversification sweet spot over time. But anyway, now moving on to question number 5. This one comes from David, and David here says, I really enjoy your videos. Thanks, David. I really enjoy your videos and want to have a dividend portfolio as well. Is it okay to just buy the stocks in your portfolio? Well, truth be told, David, I don't think it's a great idea that you buy a stock just because I own the stock. You know what I'm saying? I could be wrong about any one of the positions in my portfolio, and I would hate for you to potentially lose money because you followed me into an investment without looking into the investment for yourself. And with that said, I think it's fine to get ideas from my portfolio, but it's essential that you research every company for yourself to determine if you think it's a great investment. And in this next video right over here, I'm sharing with you my simple, foolproof method on how to pick winning dividend stocks. One of the most difficult things about dividend investing is figuring out the right companies to invest in. And if you're new to all of this and don't know where to start, then this video right over here is perfect for you. So click right over here to check it out, and I'll see you in the next one.